afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be looking for the consolidation phase trading opportunities in the USD, and I am not really expecting any big move in today's session as well as in the first half of tomorrow's session. So we will have to be content with small moves in the USD, and we will be trading accordingly. If we consider the trading session so far in the day, the US equities are inching higher while the US dollar is inching lower in continuation of risk on theme, which has remained dominant so far this week. Today we are likely to see new all-time closing highs for the S&P 500 and Nasdaq, while the Dow Jones Industrial Average is also catching up and not really far from its record high. We will be looking for trading opportunities to take advantage of bullish momentum in equities while considering the USD's positioning in currency universe. Today's moves have been dictated by technical formation in in absence of strong triggers on the data front, though we do have to acknowledge that jobless claims falling to new pandemic lows have helped the response sentiments in equities. If we consider the data scheduled for the day, there were not many major releases during the early hours of today. We had almost blank data slate for the Asia as well as for the European countries. So we will be straight away considering the data points which we have got for the United States. We had multiple releases related to trade balance as well as labor market at the same time. US trade deficit decreased to $70 billion in July compared to USD 73.2 billion in the prior month. There is growth in exports while imports remain stagnant with slight decline. In the labor market, the signs of pickup in economic activity are becoming visible with numbers of people applying for jobless benefits falling to new low of 340,000, which is the lowest since pandemic began, the COVID pandemic. It will be interesting to see what kind of jobs data we get from tomorrow's non-farm payroll data release. Yesterday's ADP employment change reported disappointed ADP report disappointed the US dollar bulls with less than expected job creation. That negative impact is being felt in today's session as well, with fall in initial jobless claims not helping the US dollar to rise. Now let's consider the outlook on the technical side. We will consider the USD JPY first, and after that we will also see what's happening in the Dow Jones Industrial Average. Here, pardon me that I forgot to change the slide. This is from yesterday. So moving on to the USD JPY technical outlook. This is the daily time frame chart, and for last couple of days, the USD JPY has traded rather narrowly, and as a result of that, the ATR has collapsed, which used to be closer to 60. Now it has declined below 50 for a considerable amount of time. I think this is the first time in many months where we have ATR below 50 for the USD JPY, and it also points to the lack of direction in near term. Today is not really likely to change. We can expect the USD JPY to consolidate in narrow range for today's session and most part of tomorrow's session till we get the non-farm payroll data, and that is likely to provide a big impetus. We will be looking for make or break moment there, and depending on the job creation, we will be looking for a big move on either side, and we can position ourselves accordingly. So we will be looking for what are the important levels to watch out for and how we can take advantage of possible move in the USD JPY tomorrow. This is the 4 hourly chart, and we have this brand new pivot point series formation for the month of September. On the lower side, you can see that we have the central pivot point around 109.8, which is the support in near term, and it has acted well so far. We have seen the USD JPY holding above this near term support, and I think looking at that along with this formation of higher highs and higher lows in near term, we will have higher chances of USD JPY breaking on the higher side. Of course, a lot depends on what kind of job creation happens, and considering the disappointment from the ADP employment change data, we will have to be cautious. But still, if we get the breakout on the higher side, we can trade accordingly. We can place the orders above the near term resistance, above the immediate swing high, and if we get the data on our side, we can profit from this positioning. We have the probability of USD JPY inching towards the first resistance in case we have a bullish breakout in the USD JPY, and the next target works out closer to 111, and for that we will have to look for positioning where we can optimize our entry and exit points. We will have to mostly rely on the lower time frame charting of the hourly time frame, where we have these three SMAs converging closer to the 110 level. And as I explained to you with the 4 hourly chart, we also have the support on the lower side. And so far this week we have seen the USD JPY trading well above the support, and if we don't really see any fresh break prior to the non-farm payroll data, I think we will do well to place the order anywhere above the immediate swing highs. I think order anywhere closer to 110.15 to 110.2 should be good enough in leading up to the non-farm payroll release. And if we have the break on the higher side, we can expect these immediate swing high, which is established around 110.5, to be broken, and we can expect a new move, new all-time, not all-time, new swing high closer to the 111 to be formed in coming days. So I think that probability is quite good, and we can trade accordingly. The stop loss is going to be just little below the immediate swing lows. So for entry anywhere above these consolidation highs, we will have to take the immediate swing low as our stop loss point, and this positioning is for the data release. Prior to that, it will be better to avoid taking any trade and simply sitting on the sidelines and allow this consolidation phase to unfold. And depending on the data release, we will have a big move on either side, and we can stand to profit if we get the move as per our anticipation. Moving to the equity segment, we will consider the technical outlook for the Dow Jones Industrial Average. This is the daily time frame chart, and here we have this Dow Jones chart showing the stagnation after getting closer to the all-time high. Last week we saw the Dow Jones Industrial Average establishing the all-time high around 35,600. From there on, it went on to decline almost 1,000 points, but the reversal has been quite swift, and we have seen it now entering into a consolidation phase with the underlying momentum on the bullish side. So in today's session also, we are seeing this undertone playing a role and continuing to push the Dow Jones Industrial Average on the higher side. The the decline in initial jobless claims have also helped the sentiments pick up the buying momentum, and that is what is evident from the formation so far. So we can expect the move towards all-time high from the Dow Jones Industrial Average, and we can expect a new all-time high above the 35,600. And for that, we can continue to look for optimum entry and exit points. Given the fact that trading range has been narrow, we will be in a good position to enter with a sharp stop loss and target price. we will have to take the help of this lower time frame formation where we have the central pivot point around 35,200, and that can be considered as a important marker in near term. As long as we have the price action above this central pivot point, we can be fairly confident of continuation of this bullish momentum, and the next target is going to be around 35,800, which is the first resistance of this month's pivot point series. And whenever we will have the break above these immediate swing highs above the 35,500 level, I think this is going to be the natural target. So we do have the room for 1 percentage point move on the higher side, and stop loss is not going to be wide either. We can keep the stop loss fairly sharp for any entry in this range or above this range. If you are trading for a fresh breakout, then an entry point can be kept little above these immediate swing highs. Even in that scenario, the stop loss is going to be quite sharp, as we can take help of these lower time frame formation where these three SMAs are converging, and we can utilize it as a important marking point. As long as price action remains well above this 200 SMA, we can continue to bet on the bullish momentum. So in today's session, utilize this 35,400 as a marking point. Any entry above this is likely to bring you profit if we get the Dow Jones Industrial Average next directional move right, and if it goes on to continue to move towards the first resistance of this month's pivot point series, which is just little below 36,000. So for entry anywhere in the price band of 35,400 to 35,500, we can keep a stop loss of around 35,250, which is also the immediate swing low. So day's low can be utilized as a stop loss level while looking to enter into any new trade closer to this confluence area of these three SMAs, while targeting the move towards 35,800 as the target price. So that is going to get us a good risk reward ratio. Not exactly 1 is to 2, but still quite good. For risk of around 150 to 200 points, you will stand to gain around 300 to 350 points depending on your precise entry and exit. And the favorable conditions are also visible. So keeping all these in mind, I think this risk can be taken, but always be mindful there is a risk involved in any trade, and so is the case with this trade too. So that's my take looking at the current price formation of the Dow Jones Industrial Average. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can check out the Decoscopy Analytics page. Whenever you want to start trading, the JForex platform is available for a world-class trading environment and low spread. So you will have the ease of trading along with low cost. We are also available on the Facebook. You can reach out to us for any query or for any market-related discussion. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.